Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our dashboard is integrated with Trader, meaning you can research and discover trades on our platform and then seamlessly send them through to your Trader brokerage account. Last week on the show, we focused on finding trades using skew and term structure, where we place two trades on IWM, a long call calendar, and a short put spread. And today we'll look at how those trades went, and then we'll move on to finding some calendar spreads to trade. We'll look at our scanners, theoretical values, and some important options indicators to find a good calendar spread for today. Matt, if you're ready, do you want to share your screen and go over the trade from last week?
Sure. Put you on the spot, but do you remember what we did that call spread for in IWM? The
Yeah, I think it was $1.12.
$1.12. Okay, so we sold that out for 20 cents. So it's about 90-cent loss, and we made 84 cents on the put spread. So we were down like 3 cents or 5 cents or something like that. So again, from we'll close out this short put spread, only a penny left. So we close that, pay a penny. They're asking, maybe we'll give them even 2 cents for that. So we will we'll get that done in our paper trading account. And what we'll do with that filled, we have a strategy going, the wheel strategy. And I'd like to show you how to continue to do that. These other ones are trades I'm testing for future shows. They're going to be a lot of fun. So in the back tester, we have my favorites. So I scroll down for the wheel strategy.
You can also find it in, we have a SPY and IWM in the all back tests, just for those.
Oh, okay.
I'm not sure if you, oh, there it is.
There it is. Yeah. So the wheel, here's that wheel strategy. I just wanted to view it. So, returns, we have the wheel strategy in here, time in the market, Sortinos and all that. One thing you could do.
This is the one that we placed like 3 weeks ago, I think.
Yeah, and then we rolled it, got into it, and rolled it. Now it's time for another roll, and we've made like $300 every trade. So, so we're doing pretty good on this channel, just based on this. So selling. I'm not one so usually for selling naked puts, but we have a good strategy when we get in, how to get out of it. So, so this is the top trade we do. Based on all of the min maxes and deltas and all that. So we're going to use this. It's a little bit longer than most, but we will sell this on the bid there and keep this strategy going. All right. So with that out of the way, we can now focus on the calendars, what the show's about. So that Phil. In calendars, what I like to do first is just look in our trade ideas. And one of the reasons, or one of the nice things is that with the trade ideas looks at the environment that we're in right now. So right now the stock price are mostly above the 50-day moving averages. The IB percentiles are low. RSI is overbought. So in the trade ideas, we search for the best trades out there. We look through, like we said, millions of backtests, and we find the ones that have the best, what is it? The average return divided by drawdowns.
Yeah, we look at return on risk, which is one of the things you can rank by in the backtester. Yeah, it looks like worst annual return, max drawdown, and it weights them all to come up with a ranking.
Right. So there are some, so it looks like calendars would be a good thing for this environment. So another thing we could do is go find the best stocks or ETFs for a calendar. So when you're doing a calendar, you're buying the back month and you're selling the front month, and you want to sell kind of a high front month compared to the back month. And so what we do to identify that is we call that contango. So contango is actually it defines when the front month is below the back month, but a negative contango is when the front month is above the back month, also called backwardation. But we just kind of say negative contangos. Keep it simple if that's simple. So it looks like IBM's on here. So I went out and found, certain market cap, this is an asset type of ETF, and where the contango is negative, volatility is within a certain range, and minimum option volumes over a certain amount. And so we found IWM. So we could do this certain ways. We could either so now I want to go to the option scanner, and we could either bring in that stock scan. Of course, I forgot the name of the stock scan. Calendars low contango. So I'm going to look for calendars low contango and ETFs. Some reason it's bringing in more than that, so I'll clear that out, and I'll just put IWM. So IWM, and then I have I want to find. Okay, so here's a short-term calendars scan. So this will be looking for short-term calendars, and then it'll bring back the best one, a little bit out of the money, calls and puts, and we could either do a double calendar, which is a call calendar and a put calendar, or we could just do one. So the price of IWM is 197. So here's a 199. And so you can see it's slightly, we wanted to go up to that call. So the delta is slightly positive at only 1. So it's not that big of a delta. So we like this trade. Let's move it on over. Since we're paper trading, let's just get this filled. Okay, we like that.
Hey, Matt.
Yes.
So the reason you're looking for short-term calendars, right, just to confirm, is because of the contango reading that we're seeing?
Yeah. So that's a good point. So let's just check that out. And then here, let's find one below. Let's find like a 190. We got 195 here. So the 195, and we could see how that looks, as Tyler was saying, we could see how that looks in the trade builder, because the trade builder does a good job of showing the contango, meaning, let's see if I can, let me get my drawing tool going. And so you can see the red dot there. So we're selling this particular expiration. So that's a high volatility. And you can see how like these form a good contango, a short-term contango, negative contango, I should say, where the front month is well above the back months. And then we're buying down here. So that's a pretty good relationship. A little of that has to do with the holidays that we have in there. We use calendar days instead of business days for a number of reasons, but so that sometimes overvalues some of the low price of the options, and that implied volatility gets punished overly in that type of a situation. Where we just counting business days, it wouldn't be so bad, but there's a lot going on even in off days that we do it that way. So that's what we're doing. So I'm happy with that look. So this is the put. So what I'd like to do is then take a look at that trade. Again, pretty inexpensive. Usually these things are higher, but the volatility is low overall. And so usually we were paying about 30 cents for these, 35 cents for these. just back a few weeks, but now it's a lot cheaper because of the vol coming down. All right, so let's send this order, and then we'll go to our positions and take a look at it. Tyler, do you have any other comments? Did I overlook anything?
Yeah, I think that was a good overview. Are there any other? Well, I want to ask what the best time to get out of this trade is. Are we looking at
All right.
the same indicator? Or are we looking at volatility? Like, what are we looking at as sort of like an exit indicator for this?
Right. All right. So let's say, how do we answer that question using our data? So let's go to the backtester. Let's go to IWM. And let's look at the calendars. Let's look at the call calendar. Let's do a shorter term call calendar. We'll just put 30 days here. And then the deltas are somewhat.
You're trying to find a backtest similar to the trade we just put on?
Yeah, I'm trying to answer your question.
Yeah.
As well as I can. So leg 1 is the long-term leg. So again, we'll just put a max of 30 there. Or I'm sorry, the deltas. I want a minimum delta because I don't want these are pretty far out of the money. Let's just do like a 35 delta minimum. And then, okay, so that should. Now to answer Tyler's question, now these are sorted by the top best return on risk. Again, the return on risk, you could hover over the information and see that how it ranks based on average daily returns divided by the worst month, the worst annual return in the max drawdown. So the negative of that. So, so we're trying to find, a good return on it. It's almost like a Calamar ratio, I believe, is Calamar is return divided by drawdown. So we sorted by those, and the best ones. And now, to answer your question, here are the exit triggers. So we test all these exit triggers, using a stop loss, using a profit target, or both. And Tyler, as you can tell, these all have kind of a large profit target. So 300, 100, 75 is the lowest on these. So those are all the best ones. So let's look at the worst ones. So these are the worst performing IWM call calendars. And what you're going to see is it's too tight, meaning they're getting out too quickly and they're having stop losses. So these are all bad. You don't want to get out of these calendars too quickly. So
interesting.
To answer your question, we want to maybe we'll set a 150 or two. Let's go to our positions and we'll see how to set like a 200% profit target, and and if they go out, it's only 23 cents or 25 cents that we paid on both. So let's just add an alert, a trade alert. So we'll go out at 200%, which is a 2. We have this thing that looks at how wide the market is. So 6 cents wide. If the market really widens out, we don't want to get alerted. So we make sure it's under that. So that's a pretty important addition. And I'll put Tradier Hub. And submit change. I'll put paper trading because I have multiple. So I'll submit that change. So that was for the put. So let's look at the call and do the same thing. Trader Hub, and it kept us in there, so that's kind of nice. All right, and then you could see that over here, you could see that the profit and losses are. Let me just do this. Again, trade alert 2, Trader Hub, paper. You can see that there's now an icon here that says what we're doing, so that's kind of nice. So we've set those up, and we will be alerted if we ever get if these are ever worth what is it? So we make 200%, so that'd be 75 cents. So if those go to 75, so we pay 25, 100% would be making another 25, 200% would be making 50. We've already paid 25, so at 75 cents, we'll get alerted on those. I also want to just take a look at what a double calendar looks like. So you could tell there's quite a big space here now. a double circus tent. So that's what the max. We want the max profit are kind of between or at each level, but kind of if the stock stays between 192 and 202, so $10 we have on this particular position. So so yeah, that's a calendar, and that's actually a double calendar. And then so just to kind of recap a bit, what we did when we were looking for a strategy is we went into the trade ideas that looks at all the identifies and only backtests in these environments that we're in right now. And then we saw a lot of calendars, and then we went to the stock scanner and found the ETFs that had the lowest contango, so that had higher front months than back months, and we identify those. And then we moved over to the option scanner. We set up our scans. We found what we thought were good calendars, and then we went over to the trade builder, which shows you could see where the stock is. You could see where the volatilities are, so we could tell that these volatilities were beneficial to us. So we went ahead and did these trades, and then we set alerts to that's only half of it. Only half of it is finding your trade. The other half of it is when to get out, and so we determined to get out by looking at other backtests, similar backtests, and a lot of the worst ones were too tight, and the best ones looked like they had a pretty significant profit target. And so we settled on something in between there, 200%. And so that's when we'll get out of this long calendar. So how do we do, Tyler?
Yeah, that was good. Thanks, Matt. I do have a question. So in your years of experience, you really like calendar trades. Is there like an explanation or a reason why we're seeing these high profit targets doing much better than the lower ones? Is that specific to IWM? Is it specific to the current environment? Like, is there a reason for that?
So yeah, and I still remember when you start on the floor, you go to a training class, and my buddy started with me, and he loved calendars, and I mean he would kind of work into it with his positions that. As a market maker, you don't really take positions, but he would kind of work into it because he said the calendar was expensive or the calendar was cheap. So I never really traded like that. I was just a theoretical value guy. Mm-hmm. But now that I'm off the floor, I like the calendar a lot because, you don't pay a lot for it. And, there's a big probability of if the stock finishes near your option, your short goes out, and let's just look at this one. So again, this is a lower priced kind of medium termed DTE, right? So 50 deltas. So let's answer Tyler's question, why we're exiting. So this, and so that's the 40 cent kind. I'll just put it on this one. So one of the reasons that you don't want to get out of these too quickly is you have a chance to make a significant amount of money, and the decay isn't that bad, and it's such a low priced option that if you're getting out, you're getting out at if it's 25%, which we saw are the worst ones, that's only like 20 cents. And so do we really want to do that, or give it a chance to run to so this, 19 to 12. So this is, in your head, you could kind of say, well, this is right at kind of near the money. If this goes and expires worthless, this expires near this area, it should be like a little less than $2. But so that's going to go from 70 cents to $2. So if you give it a chance to breathe, there's a good opportunity to make a lot of money on this. So that that's the way that my partner came here. that's the way that you're playing this calendar, is to make a good amount of money, and you don't lose that much if it goes against you and goes out. So I think that's the reason, why the back tests kind of converge around letting it run, and the worst ones are if you try to get out too early.
Got it. Yeah, that was a good explanation. Thank you. So we covered sort of how to exit it, and we looked at contango as sort of the most important indicator, for this trade. Are there any other indicators that you like to use in terms of entry criteria? We did the stock scan on the contango, but are there any others?
Yeah, I mean, that's why we kind of came here in the first place. That we saw that in this market environment, like where, the IV is pretty low, let's just look for some high margin returns. There's too far, but so a lot of these calendars, are doing well when RSI is overbought. So we've rallied. The IV is pretty now, I guess, moderate in IWM, and so these are the things that you would look for. I mean, these. So what we do when we do these back tests is we only make the entry trade, when these entry triggers are in that range. So overbought, which is kind of where we are now, and it's in where So I let the back test and the trade ideas help inform me what strategies are doing well in this particular environment that we're in right now.
Gotcha. That makes sense.
And if you go to the back tester itself and you pick out IWM, you can see that there's that C that shows you where all of the criteria are right now. So that's kind of how it works.
Okay, cool. In the stock, if you go to the stock scanner, are there any like how would we set those indicators to scan like 5,000 stocks?
Yeah, so I mean, if we're doing stocks, then we take out the asset type, fundamental. So, and we could just make it display only, so it gets everything. And then we would go, say things like where the implied volatility is percentile is low. So
those are pretty cool. The you can see sort of the bottom 10, bottom 25, bottom 50.
Right.
So we take a look at the entire market and then take a percentile of each to show you, so that you don't have to like input the direct values.
Right. So that was a big one. And we don't have RSIs or anything in this one. We have it in the back tester, but we don't have technical indicators in the stock scanner yet. That's a little bit too technologically challenging. We'll get there soon, but we're not there yet. So that's how I would do it, like, and identify, these are relatively large stocks that have negative contangos. Not a lot of them do right now because, in the market right now, when volatility is somewhat subdued, it's going to be more subdued in the front. So it's hard to find contango stocks when the volatility is this low.
So you'd probably find more when the volatility is higher. A lot of stocks would have lower contango.
Yeah, absolutely. So these front months are, when the volatility comes down, the front months really go first. When it slows down, that's where the volatility is felt first.
Gotcha. Okay. And in the option scanner, how do you like to rank them? Do you rank them on the forecast percentage? What kind of combination of that?
Yeah, I do a little bit of distribution. Is this the one? Yeah. Oh, this is here. Let me just go on my calendars. IWM. So for calendars, I somewhat like to do like the risk reward. And, I'll do a little bit of the forecast. The smooth doesn't matter too much. I usually, if it's a stock that has wide markets, I'll set a range on here, but the range doesn't really hold on these. So I'll say, -3% to +3% on the smoothing. So that kicks out anything that's overvalued or undervalued. It usually indicates that there's a wide market, and our smoothing is identifying the real theoretical value, and the wide mid market is off. So that I'll set that. I'll set, and so these are the ones that I would find, the ones that have, a decent amount of edge. This is the S&P, so it's right at the value, but you'll get some edge. You'll get quite a bit of edge sometimes on the distributions for these particular trades. That's why I like to make them.
Awesome. All right. Yeah, I think that's pretty much it for today. We found a good calendar trade, looked at the stock scanner, the option scanner, and then also found some good information in the backtester on when to exit. Thank you for explaining that, Matt.
Yeah.
Do you have anything else?
How to combine two strategies when you're in the position. That's a really cool feature, I think.
Yeah, the double calendar. That was an interesting payoff graph, and it'll be interesting to see how that performs next week. I'm excited to see.
Well, we need a IWM between 192 and 202.
All right.
So keep an eye out.
Sounds good. Well, thanks, Matt, and thank you, Tradier, for hosting us again. If you have any questions about our tools, you can go to ORATS.com or reach out at support@ORATS.com. And all our tools are available online as well. Thank you, and see you again next week.
Bye, everyone.